I used to think that a good strategy will work on anything. I was wrong because after running backtests on scripts on TradingView for the past few months, I have realized that the strategy fit is far more important than the strategy itself. And in this video, we're just going to look at the data so that you can stop blowing accounts. Let's head into it. So if you're out there and you want to see what forex trading really looks like, this is the channel for you. Like, trust me, this is the channel for you. This channel is the raw documentation of actual progress and regressions that a person who is into forex seriously and also has a 9-to-5 job is like. This is literally the whole shebang. Thinking a strategy will work in any asset, any time frame is natural. We're humans. I feel that way too. However, when I decided to run in the tests, like actually run the test to see what results will look like, I was shocked with what I saw. Trust me, it is not a planned work or something. It is literally a machine doing the work. So it doesn't miss chances or say it doesn't take the chance. It is simply, I put a script in TradingView and let the machine run it through a certain time frame. Now, the thing is this, what I came to discover is that the strategy itself is not really a problem. You can use any strategy and be profitable. That is the statement that goes around the internet. But what does this actually mean? Well, it's simple. It is 1, the asset, 2, the time frame. That is where your strategy really shines or burns off. Like, it's either going to make you a billionaire or it's going to burn your account. And I'm going to surprise you with this. I ran several tests, but I'm going to show you one of it. We're going to look at the test on the euro against the dollar, and we're going to do it for the different time frames of the euro against the dollar. Let's head right into it. So right here on my screen, I'll try to explain the strategy for you before we dive into it. The strategy is this. What these 2 lines you see here is the SMAs, the 20 SMA and the 50 SMA. That is the 20 simple moving average and the 50 simple moving average. So if you don't understand what 20 and 50 simple moving averages are, I'm going to just tell you straight up. Please stop this video and go watch SMA and understand what it is, then come back and continue from here. Now, this is the thing. We all know fully well that if the 20 SMA is above the 50 SMA, it's showing a bullish momentum. And if the 20 SMA is below the 50 SMA, it's showing bearish momentum. Now, this is the standard knowledge. However, if you try to trade with indicators, you must have seen a lot of losses here in your life. It's clear, very obvious, and very normal. But however, that same strategy can also make you money in some certain cases. For example, if you had bought somewhere like here after price crosses the 20 SMA, you would have made like a small profit all the way to this point. But if you had kept that trade running, well, you end up in losses. The same strategy happened here, where if you had bought right here and you had held the trade, you'd see how much money you would have made. It's about 2.6 risk to reward ratio. That is like huge profits, and that is if you cut out at the top. If you're still in this trade, obviously you'll still be running a little bit in profit, though it will be far more smaller than it was. Now, this is not the whole strategy. The whole strategy is all about this. This particular strategy is owned by a person called Nick Shawn. This is the way he trades. What he does is, or rather, this is the way I saw from the video I watched that they trade. Now, this is the way it works, right? If price, I'm going to just do an illustration here. If price moves like this, right? If price moves like this is how price moved, right? And when price moved like this, the moving averages obviously will follow through in its own way. Now, if price is moving like this and the moving average is pointing upwards, that is 20 SMA above 50 SMA, you should be looking for buying scenarios. And the only way you should buy is when price breaks a high. So if price breaks this previous high, you should buy. And that is only when the SMA is showing bullish trend. If price breaks this previous high, you should buy if the SMA is in bullish trend. Now, flip that the other way around is what you should do when you want to have a selling scenario. So that is all about what this strategy is. Now, I ran a Pine script to tell me, okay, run through history and tell me every time price has crossed, like, price is moving upwards and crosses a high when the 20 SMA is bullish, the 20 SMA is above 50 SMA, you should buy. End the trades when price comes back to the SMA range. That is the strategy. Now, this is Euro US dollar, and I have traded this. This is the strategy, right? It has been playing from January 3rd, 1971 till February 26th, 2026. That is that's 50 years, 55 years of trading. If you had been trading 55 years with this strategy, right? That is simply what it's trying to say. Now, let's look at the whole thing. It has taken 316 trades. Mind you, this is on the daily time frame. Look at the metric. You see how absolutely outstanding this strategy is. It is with a factor of 1.911. That is an outstanding profitable factor. Like, it is bewildering to have that kind of profit factor. It is crazy. You are literally in one of the high percentage winners if you have this strategy as your strategy over this 75 years, even though there has been more losses recently, but the wins have so outweighed the losses. That is what it means. Now, this is where the whole thing becomes crazy. You can see that this strategy actually works. But when you take it from time frame, this is one asset, right? This is one asset. When you now take it from time frame to time frame, you would be surprised how it's going to crumble. Mind you, this strategy is on the daily time frame. Let's take this to the 5 minutes time frame. And all of a sudden, the same glorious strategy in the last 1 month has been absolutely abysmal. Matter of fact, you would have been underwater heavily if you were trading this strategy on the 5 minutes time frame. Remember, it had a 1.9 profit factor, and on the 5 minutes time frame recently, right, it has been a 0.6 profit factor. Let's take the same strategy, the same asset, 15 minutes. It changes. You can see the graph changes between 2025 November 30th till date. You'll still be in losses. You can see what it looks like. Now let's take a good look at it again on the 1 hour. Another very, very deadly move. The same strategy on a different time frame. Let's take a look at the 4 hours. Same bomb. You're seriously in the bombshell. Let's take a look at it on the weekly. The same strategy, far less profit factor. Nothing changed. The exact same strategy. And then now let's look at it on the monthly. And you can see you'll be in the red. Absolute abysmal red. And that is since 1970. But on the daily, it is outstandingly profitable. So what does this all say? The bottom line is this, right? No single strategy is bulletproof. It doesn't exist. Instead, you should find that strategy, not just find the strategy, but find the asset it works and the exact timing, the time frame it works. Once you find this, you're going to stick to this and you're going to go all out for the rest of your life. That is what you should be doing. When the strategy starts to fail too much beyond the original data failing point, then you need to switch your strategy, possibly switch your asset, or even just switch the time frame. You will become profitable again. This is my newfound way of figuring out what strategy to take, what asset to trade, and what time frame to trade it. See you guys in another one. And I hope this helped your portfolio. If it did, do well to hit the subscribe button, hit the like, and follow. See you all. Peace.